More verbal intervention from the authorities. And what really came out of the state council meeting that the markets need to digest?
I think after what we heard from Liu He last week, traders were just a little bit anxious that hopefully we were going to see some sort of policy action soon after. And with that LPR, it was expected that they weren't going to do anything because the MLF last week, they didn't do anything then. But then again, I think some were still hoping that we could have seen some sort of action on Monday. We didn't get that. And therefore, we're hearing these kind of similar promises from the state council meeting last night that was chaired by now the premier, Li Keqiang. Similar sort of rhetoric here. We also are hearing from state media telling people to stay optimistic about the local stock market due to the policy support now. But from what we heard from this meeting last night, they're calling for the adoption of monetary tools to sustain credit expansion at a steady pace. As you mentioned, though, they still don't want to flood the market with liquidity. That's still kind of what you hear, the caveat there. But then again, markets, you talked about the reaction. It was a bit of a disappointment. You take a look, even in the U.S., the NASDAQ Golden Dragon Index fell some 4%. You saw 8 shares yesterday in Hong Kong erased gains as much as 2% at the end of the day, lower. And it was more of those rate-sensitive sectors, the financials, the banks, the property developers that were really weighing down on overall sentiment. Of course, there was still news of Evergrande suspending trading, Ronshine as well, unable to publish their audited results due to their auditor resigning. So there's a lot of factors at play here. And then, of course, that China Eastern crash certainly has been a worry now, a new worry. So markets still remain on guard. As for the next sort of policy action, I think people are still now betting on these triple R cuts that could be coming as soon as second quarter or first or second quarter. That was according to what we heard from some economists as well. And hopefully this is just a pause before the easing cycle kicks off again.
Two more property developers in the meantime unable to publish results. So it seems like there's still quite a bit of chaos and uncertainty in the sector.
Yeah, this is going to be interesting. We'll see how markets react. This is two of the biggest property developers in China, Sunac as well as Shimao. It's interesting. They both came out with similar statements as well. It seems like this is more operational, COVID related. They said that because of some of their employees and certain management have been put in quarantine during this latest wave of COVID, it did impact their audit process. So there also was some delay, according to Shimao, in terms of getting some confirmation, some third parties as well. So they do expect that delay in the publishing their results for 2021 for both of them. But then again, we heard from Sunac already out with a profit warning just before the statement came out, talking about how year profit could decrease by about 85%. Core profit, they're expecting about a 50% drop from a year ago. And they continue to cite a lot of challenges that they saw in the second half of last year in the property sector, which, of course, we've telegraphed quite a bit here. But they mentioned it was primarily due to the loss and investment loss from a disposal of stocks for Sunac China. There was a decrease in sales revenue. We talked about how some of these property developers have had a tough time trying to revive those home sales as well, and a decline in gross profit margins and an expected credit loss as well.